Again, the major thing, just to rehash like the Leadership number one, is setting yourself up with something like this. So either Scottrade or E-Trade or through your bank or USAA or something like that, we all have something that we're probably already attached to. So like mine, I use this one as my backup one. I have another one that's that Merrill Edge from Bank of America. So if you guys have Bank of America or I don't know about the credit union. Anybody find out that does a credit union have one? Like a stock account of some kind?
That's where I bank.
Yeah, and you'll have to find out. I don't know. If they don't have one, you can always set yourself up with one of these. So Scottrade or E-Trade. So anyway, that's what you missed from the first Leadership, if you missed that. And this is the one that I set up, and they're all kind of similar. You'll have to go through and look at the different nuances of yours. Like how different is the USAA one compared to Scottrade? Like that initial setup screen. Is it similar?
Yeah, pretty similar.
Okay, and anybody else that has something different than Scottrade? Is yours like a little different? Different?
Like the fidelity?
Yeah. It looks a lot different. Yeah, it's, telling you, each one is very different. Like my Merrill Edge one, it looks nothing like this. So you have to go through and look and find where everything's at. So that's actually what we're going to be doing today. So this PowerPoint, we're not going to go through all the slides. There are a lot of them. So if you leaf through it really quick, you can see the chapters that I cover in my class. And again, this class is, or the Leadership is right out of the investing BUS 261 class. So this actually covers 5 chapters. And we're going to try to roll it into 1 hour. In class, this would take me about 15 hours. So we don't have 15 hours, and I can't speak that fast. So I broke it down so you can actually see the chapters. It makes it a little more, a little easier to follow. So you can see how I've broken it down and what the different chapters are on. We can spend as much or as little time on these chapters as you guys want. So like the first one, it's all about how to pick the stocks. So I will show you mine here. This Scottrade one, what I've done is I've set up my watch list. And what I'm doing is I'm looking at some of the things on the first set of slides here. So I'm looking at stocks that I think might go up, some I think might go down, and I'm watching them. And I'll point out a couple of them as we go along here. If you flip over to the next side, though, so the second page, so some of these are common stocks. I don't have any preferred stocks on there, but we could find those. They're all in there. You can also look and find the treasury stocks, and then it's all about actually how you read these things. So I'm going to jump right into that. All right, let's take, of course, I have bookmarked Freeport. So Freeport, anybody own that stock? You have it? All right, where did you get in at? Did you buy low?
860.
Beautiful, very nice.
Between that class and this class, so it's up a little.
Yeah, it's actually doing pretty well.
Something last week, so.
And this is an interesting one. So it's a local company that we all know about. The more you follow these things, that's what these next few slides, or the next chapter is actually going to cover, is how you actually follow these charts. So if you look at Freeport, Shalene bought it at, what, probably this one. And if you can time it like that, that was brilliant. So I know next time it goes down below 10, I'm probably going to jump in. But some of the other things that you might not know about. So the bid size, that's the price that we would actually pay now, and the ask. And then this is where it opened today. So it's up a little bit. It was at $11.93. It did close yesterday at $12.03. It reached $12.38. So some of those are pretty obvious. But then look at the other useful ones. The 52-week high was $31.54. So whoever had it at $31.54, how much panic do you think they have right now? A lot. You hang on to that thing and you just say, oh, please go up. So, but then the other side of it is, look at that 52-week low. She bought pretty close to the low, 776. So it's almost a guaranteed moneymaker on that one. All right, so the other ones, the more complicated ones. All right, so again, your stock account might look a little different, but how you read this thing. All right, there's the earnings per share. Let's see, it's in parentheses, so I assume that's a loss. So theirs was $6.38 for a loss. The PE ratio could be useful if you follow that. The market cap is how much the company is worth. So this is a pretty big company, and we all know that. It's a large cap. So if you're interested in a stock, you look at that thing. If you want a small company that you think might grow, you would want that to say small cap. I'll try to find one for you guys here in a second. $14 billion, that's how much the company is worth. The shares outstanding, that's how many shares are out there. So how many shares do you have? Do you remember? Is it
enough. I think I should have spent way more on them, but I think.
But conservative, that's all right.
50?
Okay. So she has a portion of the shares outstanding. So that's where her shares are in there. The float, we don't have to worry about. The dividend yield, though, this is the interesting stuff. So later on in the chapter, I tell my students about these things. So they actually do a dividend. And there are a couple interesting ones. Now, I think we might have missed it. Today's 10/20, right? So see that date of record thing? That's when you actually have to own the stock in order to get the dividend. So how you read how much you get, it's 5 cents, and they pay it out every quarter. So for this, you're going to get 4 quarters in a year, so you're going to get 20 cents. Did you get a dividend yet?
No.
So she can look forward to that. You owned it before 10/15.
Yeah.
Perfect. So if you have one share, you're going to get 5 cents. It's not a lot, but it's just bonus money that you get for owning the stock. So, Shalene, on November 2nd, you should notice a check from them or deposited into your account. Maybe a couple bucks. So whatever it is. So it's free money. There you go. Exactly. Quit here. You're rich.
I think I bought 120 shares.
That's not bad. And that's actually one of my points too, is if you're not sure what's going to happen, don't buy as many shares. So she was actually really wise. So anyway, that's what you want to look at is the date of record. You have to own it before then. And there's one date here that's actually more important, the X date. You got to look at both of these. I would actually own it before the 13th, because then it gets a little iffy if it's actually going to go to you or the seller. So whoever sold you the stock might actually get that dividend. So I would own it before the 13th. So look at those, any of the dividend ones. So anyway, there's Freeport. And remember on this, again, a little rehash of Leadership number 1. Remember, do your research. Look at all of these things. Like Freeport is down massively, so you really got to research the crap out of this one and figure out, okay, is it a good company, a bad company, or somewhere in between? And that's where you can use all of these things. So the S&P report, you can use the Thomson Reuters report, and you didn't hear this from me, but I would ignore the Market Edge. I think they suck. They have horrible reports. It makes no sense. So look at the Thomson and the other one, the S&P. They know what they're doing. So the other thing is you might find some information down below this, below the company background. There isn't anything in there right now. Oh, there it is. Actually, they moved it. Now it's above it. So the latest news headlines for Freeport, you can do that for any of these companies on here. Like here, I'll look at another one. Anybody have Sirius XM radio? Anybody have that? Yes? No? You guys know what it is. So Sirius is this one. Ironically, it's called Siri. And you can tell on this one, it is, let's see, $3.97 right now. Do they have a dividend? Look at all the dashes. Dividend? Nothing. So if you're interested in dividends, you would not look at Sirius. But they are a pretty small company. but not small enough to actually call them a small cap. So even though their stock price is low, it's still a large cap corporation here. So anyway, that's what this first chapter is about, is figuring out how to read these things, and if you want a dividend. I can tell you though, like on mine, I'll show you really fast here. This one. So this VTTHX thing that I have on my stock account, I actually have 829.74 shares. Did I plan that? No. That's from a dividend. So they paid me out a dividend, I think it's at the end of the year. So these guys actually pay it once a year, and it just gets redeposited, so they buy more shares in the same stock. So it's actually really, really easy. If you guys are interested in owning a dividend stock or one that reinvests, it just goes right back in there, and then you really don't have to do anything.
And what is that, Jared?
So this is it's something I'm going to get to later. So that's why I have mine up, because I practice what I preach on this one. I actually bought a retirement one targeted for, I think it's like 2035. So this one is one that I don't ever have to do anything with. It's just going to sit in there for the next 20 years. And this thing, I think I bought it at, actually I know I bought it at 14,000, because I'm kind of ADD on that. So it had to be like a nice round number. So I had 14,000 in there. Now it's at 14,794. And I just don't ever have to do anything about it. So if you want to be inactive and just let things ride, yeah, you find a good one and you just buy it when it dips down low and let it go. So
How long have you had that one?
I think I bought it in my first investing class, so last year. So about a year. So it's better than having it in a savings account. But you have a savings account, how much are you earning right now? Woohoo! Again, quit your day job. You just made like 2 cents for every 20,000 you have in there. So it's pointless. You might as well have something like this. And that's why, again, I've transferred a lot of my money in from savings accounts to these things. All right, so back on script again here. If you look toward chapter 7, it's on the second page. Before we get to that, there are other types of stocks. And again, I could keep clicking through these things until we find them, but we're going to do that in a minute anyway. So with chapter 7, then I teach my students about things to look for. So, and the things to look for are all on the news websites. I don't care if you like Fox or CNN or NBC or whoever you follow, you just got to find the news. So, like my favorite one is CNBC, and I also follow the Yahoo Finance one. These are the two that you got to bookmark and check maybe every day, a couple times a day, just to see what articles are out there and what the stock market is doing. Like I'll tell you guys right now, one of the ones I'm following is, let me get it up here. It takes a little while to figure out where things are, but I'm following oil, and I'm going to make a lot of money on this eventually. So right now I'm following oil, and it's going in a pattern. And if you follow the pattern, you should be able to jump in at the bottom, just like the Freeport thing. When you saw it went down below $10, that was abnormal. Same thing with oil. If it goes down to below 45 here, actually even 45, it's pretty good. So when there are a couple things that I can actually bet on with oil, I'm not actually buying oil, I'm buying stock or ETFs that are investing in oil. So anyway, you got to find what interests you. Is it clothing? Is it retail? Maybe you follow the Walmarts. Maybe you're really into electric cars, Tesla, or like your son, going into looking at like GM or Ford or whatever it is. Maybe you have some inside information.
Probably not Volkswagen.
You brought up a great point. So that's one of the topics for one of our later chapters is like a news item like that. Why would actually Volkswagen be a good investment right now? Exactly. That thing went so low. Okay, yes, they're still probably in serious trouble, but at some point they're going to be a really good buy. And the other thing is it actually affected the other car companies. And there's actually an article on that in here talking about all the car companies were affected by VW. So, and these things change all the time. So if it's not on there, like there's one on technology. If you follow Apple, you could always look at Apple and Microsoft and Google and all those guys. Or you could look at like the big macro stuff and look at the economy. You just got to find what you're interested in.
You know, Derek, I was sitting by Dr. Richmond in faculty orientation.
Okay.
And he was so excited about this young woman who had invented, it was where she's invented a way for blood tests where they don't have to stick you in the arm anymore.
Interesting.
That they can just prick you,
Okay.
and they can do like 100 blood tests just from this.
Wow.
And there's been commercials on television
Okay.
about,
I think I know what you're
is
talking
it
about.
Therome or Therone? And I haven't looked it up, and I'm not sure if that's the same one, but they're talking about how blood tests shouldn't cost so much. And I thought, you know, that'd be something to...
And that could be in here. But like for Dr. Richmond, so if he was investing, he could look at, obviously his expertise is going to be the medical field. So, but you just have to be careful. If anybody else interested in the medical field, do you find it interesting?
Yeah.
There you go. Then that's actually one of the areas that you should focus on. So I would keep looking at the healthcare website here, and there are going to be some more specific ones, but at least this one gives you an idea of what's going on. So maybe like companies, how they're affected by Obamacare, or maybe you want to take a shot with a new company or that small company, and who knows, maybe they'll hit it big. Or maybe somebody's going to find the cure for cancer, or like this one, the 1.6 billion business of flu. That could be an interesting one. With the flu thing coming up here, anybody got the flu yet? No flu? That's good. All right. But it's going to be upon us. So who knows? Maybe whatever pharmaceutical companies deal with the flu, maybe their stock is going to actually go up. So anyway, you got to do your research. Like I have no interest in the healthcare stuff. So I'd rather follow like oil or some of these other ones. But you got to find your thing. All right. So once you've found what you're interested in, then you got to try to figure out the patterns. So if you flip it over to those charts with see this little spike there? It's on after chapter 7, it's on the second one. It's figure 9.3. All right. This one is a little more controversial. So remember when we started looking at the patterns here? So like Freeport, or let's pick a new one. Let's do a crazy one. Actually, I'll show you guys the oil one that I'm following. All right, so once you find something that you're interested in, like that healthcare one that Sharon mentioned, or the oil one that I'm following here. So you look at the 1 day and you say, okay, can you guys get an idea of what's going to happen from there? No, maybe not, or maybe. You can start to get an idea after you start clicking some of these here. This is why I'm actually really interested. So I look at the 3-month or the 6-month. If you go a little bit further, it gets a little ridiculous. So there's a great bottom there at about 750. And look at this. See that pattern where it goes down and just barely touches 10? So this thing, when it gets close to 10, take a wild guess what my bet is. I buy at 10, I wait till it goes up to about 1250, and I just made 25% of my money. So I expect to make a couple thousand off of that. And it's getting pretty darn close where I'll actually think about that this week. But you really have to time it, because otherwise you miss it and you're going to suffer something like that. You see the cliff? So this is one that, is it a long-term investment? Psh, heck no. No. I wouldn't stay in that thing for more than a couple days. So anyway, what we're looking for is a pattern. So if you believe in pattern trading, well, here's the website for you. So this is what the next couple slides talk about, is what affects the stock market and the different stocks. So some of them could be like the news release, like Volkswagen. When that came out that they were going against the emissions thing or increasing their miles per gallon thing, whatever it was, obviously their stock went way down. And we could actually find that on here. Anybody know what the stock symbol is for Volkswagen? Is it just VW? It can't be that. Let's try, I think if we just pop in a couple letters, it should work. Yeah, there it is. VLKAY. All right, so let's look at this thing. And again, this is what we spend a couple of chapters on, so I'm going to go through it really quick here. There it is. Lo and behold, when do you think the news came out that they were juicing their emissions thing? Isn't it obvious? So you look at that and you say, okay, there's the event. So if we could have shorted this stock, we actually could have made a lot of money off of that, because that thing did go down significantly. But now let's look at the history of it though. So if we go back and look at the other parts of it here, we can actually look at the year to date. All right, there's the spike. There it's way down. Look at how it went up again though. That's interesting. So this is the stuff that you're looking for to make money off of. So when that thing went down into the 20s, it's spiked up to about 30 again. You would have made a bunch of money. And then it's, well, it looks like it's on its way back down again. So who knows where it's going to go down to, but over the long term, interesting investment? It is. It is kind of interesting, because normally it trades in the, in the 40s or the 50s, and it's a German company. People swear by German cars, so it could be an interesting deal. All right, so now there are a couple things that we're looking for here. So there's actually something on CNBC, if you watch that channel at all, they talk about these things, and there's some traders in there that really believe in these chart patterns. And I think there is something to it. Like when it bottoms like that, you're kind of looking for things like that. So there are all sorts of little things here that you can look up. If you just Google chart patterns, it'll show you what they're talking about. And you might be able to actually make some money off of these again. So like Volkswagen or like my oil thing, I know the bottom channel is $10 right now. So when it gets down to this channel at 10, what do? You buy. And then it gets to the top channel, what do? Sell. Boom, that's it. It's that simple. So if you believe in that type of chart, so you're looking at the top, you're looking at the bottom, and just trading off of that. So they're not long-term things. And then there are a bunch of others in here too. So I won't go through all of them, but there's some complicated ones. There's a Head and Shoulders one, and it actually looks like that. It kind of makes sense. There's the head, there's the right shoulder, the left shoulder, and you trade based on that. There are some other crazy ones that I haven't even heard of, like, I don't even know what a flag pennant is, but there it is. So again, if you believe in the charts, you could follow one of these things and actually predict what a stock is going to do. So there's what's the other one that they always talk about? The price channel is kind of similar to what we just saw with that other one. The trend lines, and you can actually plot out trend lines on your stock account, and they're actually really, really useful. So I'll show you really fast how I do that in mine. Now, you don't have to do this yourself. You can probably find a chart that actually does it, but in Scottrade, you go under charts. All right, this is my UWTI. All right, and I will explain on this one. This isn't actually like a stock. It's actually betting on the price of crude oil. And this one is even more volatile because look at the title of it. Velocity shares 3 times long crude oil. What does that mean? It means if it goes up by a cent, my stock will actually go up by 3 cents. If this goes down by a cent, or the price of crude oil goes down by a cent, my stock will go down by 3 cents. So you are gambling a lot more, actually 3 times, by using this exchange traded note. So if I want to actually do the channels, you can set it up. It takes a little bit of doing, but I like using the simple moving average. So you click on that. There it gives you the green line. Some of them are more useful than others. You can also do by volume or any of these other statistics here. So you can actually create your own charts to actually see if you have one of these patterns here. So to see if you have a trend line like this, like the price channel thing, you could actually go in to your Scottrade and see whether or not it's there. And this one, it kind of doesn't look like that. So anyway, there are all sorts of little things that you can do with this. You just have to experiment. You can't really screw anything up unless you actually hit buy. And there are a couple of things that actually you have to go through to hit buy. So back to the chart again. So on these, you're looking for market anomalies or calendar effects. That's another one of my slides that my students are incredulous that these actually exist. But what I'm talking about are these things. Did you guys know there's a January effect or an October thing or stocks in September? They do certain things. Did you guys know that? Yeah, so, and there are also certain times of the day. There are certain times of the week. So you just have to look up and see, okay, when is the best time to buy and sell? Like January, the January effect is a rather well-known anomaly. Basically, it says that stocks that underperformed in the fourth quarter, so now, will actually outperform the market in January. So if you believe in the January effect, you would actually look at the stocks that did worse now in October, November, December, and then you would buy them in January. Kind of makes sense? Logical? According to this, it's sort of logical. You can also look at the small firm effects, a low book value. There are tons of these. And I put a few interesting ones in this as well. Like the size of a firm, small firms, the post-earnings announcement drift. So there are all sorts of interesting ones on this, and I'll show you how to get to some of these. Again, Yahoo Finance is a great basic one to start with. So if you're intimidated by your stock one itself, like Scottrade, and you can't find stuff, just use Yahoo Finance. It's really, really easy. Like one great one to use is right here. If you go under market data, here are all the ETFs, the options, the mutual funds. So how I found mine, I went to that. So I went into I think it was an ETF. And there are hundreds of these. And you can look and see which ones are doing better or worse for the day or the week or whatever. Or if you want a retirement one, you can always click the retirement thing. They'll give you some ideas. But anyway, all these things are out there. And one of the things that we could look for is the ones coming out with earnings right now, and it's in here somewhere. I don't normally look at this, so this might take me a minute to find. But you can actually figure out who actually is coming out with their prices or their performance today after the bell. So I'll bet you anything. Maybe Apple is coming up. I think some of the banks reported this week. But you can find that. So it's actually really easy to find. All right, so moving on. A couple of things that you could do wrong. So on the next slide, these are the things you guys got to try not to do. So like being averse to a loss. If you bought Freeport at $32, what should you probably have done before it got down to the $8 that she bought at? You should have sold. Where? Where's the selling point? I don't know. I do know that, which one did I buy? I made a horrible mistake, and I bought the US dollar versus the euro, and I saw it start going down. I'm like, okay, I should sell right now. And did I? No, I was stupid. I did not. So looking back at it in hindsight, I should have sold. Thankfully, the thing went back up because it's so volatile. And then, take a wild guess what I did. Oh, I got out of that. I'm like, sell, sell, sell. Get out. Don't do that again. That was one of the things. So overconfidence, loss aversion. I was guilty of a whole bunch of them. So you got to be careful. So there are some of the pitfalls in there. I talk about those with my students. Another great one to look at is the bottom where it says using behavioral finance to improve investment results. Don't hesitate to sell a losing stock. Don't chase performance. Be humble and open-minded. If you made a mistake, just admit it and move on. So, review the performance of your investment on a periodic basis. Don't trade too much. Leave the day trading to somebody else. Technical analysis, we already talked about that. So there are all sorts of things that I put in this thing. You can also look at like short interest. That's a little more difficult to find. But you're just trying to find something that works for you, that you're interested in doing. Like here's an interesting one. Anybody know why did Weight Watchers go up ridiculously today? Aha, exactly. So did anybody predict that Oprah was going to do that?
No.
Right. If you gambled right, you would have made a crap load of money today. So look at that thing. It's going up while we watch. So now it's up over 4%. No, it's up $4 and it's up close to 30% just today, just because of Oprah. So anyway, you're trying to look for things like that. And I don't know if that's a new high or a new low, but that's another thing you want to look for. If it hit a new high, what are the chances of it continuing higher? Debatable. You got to look at it. You have to do your research. Like I know nothing about that Weight Watchers thing. So is that its 52-week high? And if you're curious, yeah, we click on it and we'll see. I would go out to a year and then we'll make it a little easier to see. Well, now that's interesting. Look at that. So maybe that's why Oprah went into it. Because look at how low it was. You can kind of see what she was doing. She was brilliant. So she went bottom fishing for Weight Watchers, thought it was a really good company, and now look at how it spiked. And it's actually interesting. This might actually keep going higher. Because look at that. All it did was erase its losses from this point. And now it looks like it could return to that kind of a level right there at about 26, 27. So I know. It's actually worthy of doing some more investigating.
What did Oprah do exactly?
She basically endorsed it and said, oh, hey, I think she bought a bunch of it too, right? Yeah, so I think she's like a majority owner now. Yeah, and if you buy 10%, just like Freeport with Icon where he bought it. So we're looking for things like that. The trend looks to be in the right direction with Weight Watchers, but again, you have to do your research. But yeah, look at that thing. It's going to hit over 18 while we watch. Crazy. All right, so some of the other patterns. So they're a little more difficult to see, but again, you could Google these things and look. In the bottom right, some of the popular chart formations. If you do like patterns like I do, you want to look for stuff like that. So maybe trade in a pattern. All right, another thing you always hear about is the 100-day moving average. So if it goes up or below its 100-day moving average, that's a significant event. It means it's either getting better or worse based on a long-term trend. So you see that red line on this stock? That's what we're looking for. So we could do the same thing with Weight Watchers. You could actually put that in when we get into the chart and actually see where the 100-day moving average is. And I almost guarantee now it went down to its very, very bottom, and now it's starting up, and it's actually an interesting time to get in on that. According to this, All right, so then chapter 10, I know kind of going quick, but you can always refer back to the slides here. Bonds. All right, bonds are kind of safe. Anybody want to do a bond? Bonds are just, low stress. This is if you don't want to mess around with what Oprah's going to invest in or if this thing is going to go up or down. Bonds are for the long term. So I'm going to teach you guys how to find what you might be interested in for bonds. So first I'll show you my Scottrade one. And again, these things are all going to be different. So you're going to have to look and find it on your own website according to how they put their data in there. But I know on mine, I go in under quotes and research. This is one way to find it. I could go in under one of these, mutual fund, the exchange traded funds. There's some bonds in there, and I'll show you those in a second. But the one we want is CDs and bonds. So you should have something that says either bonds or it'll have CDs separate. And here they all are. Now you just have to figure out, okay, what do you want? So we go under bonds, and here are all the different options. So I put them in the PowerPoint so you guys can tell what they are. If you can't read those, there's municipal bonds. So what's a municipal bond? What would that be?
City or...
Yeah, a city. So you could actually, if you're interested, you could actually buy a Thatcher bond or a Safford bond. Or if you're really feeling risk-friendly, would be, how about Detroit? Anybody want to invest in the municipal bonds for Detroit? Probably get a pretty good deal on them. All right, so the corporate ones are just like they sound like. You could invest in Apple bonds. Agency ones are government agencies. And then there's some fixed income ETFs, and I'll show you those in a second here too. But let's look at the municipal ones. So they're all pretty much set up the same way, but they're kind of weird in how you read them. So on mine, what I can do is look for Arizona. I can also look for housing, education, public service. I know this is going to be difficult to read on here, but it's all just looking at the qualifications of each bond. So I can get this as narrow or as broad as I want. So if I just do Arizona and I do all bonds, I can just click Find Bonds, and it'll show me all the options for the state of Arizona. So like here's hang on a second, we'll make it a little bigger for you guys to see. Here's an Arizona State Transportation Board excise tax revenue bonds. So how you read this is you've got a 5 coupon. That's interest. Coupon is another word for interest. So it's 5%. The other number one thing you want to look at is AA1. Is that good or bad? AA? Good. Yes. A's are good. It's just like grades in school. So if you got A's, that's what you were looking for. Those are the good ones. If you find one that's like a B, B is kind of risky, like that one. Glendale, it's an interesting one, all right. Let's see if we can find a really risky one. So the really risky ones are the C's. Those are like the junk bonds where, yeah, they're gonna give you a lot more money to hold that bond, and apparently we are in pretty good shape here. There are a lot of AAAs and AA's and A's. So I would look at those. But again, if you want to look for risky ones, you look for the C's. All right, other things you want to look for. The price of the bond. So the price of the bond, there's one easy way to do this. And what I teach my students is just move the decimal 1 to the right. So how much is each bond there for that Arizona State Transportation Board one? How much is that? Yeah, so it's $1,083.66. Just change the decimal point over. So each bond is going to be somewhere around like $1,000. If it's more than that, it's appreciated. If it's below that, it's depreciated, so it's a little cheaper to buy. The other thing you have to look at is how many do you have to buy? Ruh-roh. That one's out of our range. You have to buy 35 of them. So you have to buy 35 at $1,083 each. So if you do the quick math of that, it's like well over $35,000. Do you want to put all your money into a bond like that in one issue? Like, no, that's crazy. So that's not for us. The next one is not for us. 75 of them, you need $75,000 in there. So you got to be a little careful. Those are the two things you really, really have to look at. Actually, three things. Is it A, double A, or triple A? How much is the price? $1,000. It's going to be somewhere right around there. The minimum quantity, and then the coupon, the interest. Yeah, if it's like, let's see if we can find another really good one. Like the CDs right now, I think are less than 1%. So are you really going to make any money off of a CD? No, hardly anything. But is it safe? Yeah, it's perfectly safe. You do not have to worry. You're going to make money off of it, just not a lot of money. So if you want a CD and you want to play it really safe, you would do this. And again, you would read this the same way. But again, I warned you, look at that. There it is. How much are you going to make on that thing? 20 cents. 20 cents. I'm telling you, it's barely above our savings accounts. So you might as well find something else. The only good thing is, though, you do usually have to buy less of them. Like this one, actually, that one's kind of crazy. You have to buy 1,924 of them, so that's out of our range, too. So those are the things that you're looking for. And all of our stock accounts are going to be set up something like this, where you can shuffle through the bonds and the CDs to find what's appropriate for you. So again, you need a bunch of money in your account. You have to buy at least 1, 2, probably 5 of them, 10 of them, whatever it is. But there's another way of doing it. So if you guys are interested in bonds and a safe way of doing things, I'm going to show you another thing here. I know I'm going really quick, but you can use an ETF. So that's what the next few slides are on, is buying ETFs or other things that might be better than a bond. So like that retirement one that I did, there's so many ETFs right now. This is the way you guys should go. You buy and sell them just like stock. So instead of having to have a couple $1,000s in your account to do bonds, there's another safe way of doing it. You could do like what I did and buy that VTTHX thing. These, like this one, all I did is I put in a list of ETFs. You can look for the cheapest ETFs. You can look for the most popular ones. You can look for the largest ones. The what?
What's an ETF?
It's basically like a bond or some sort of a fund that's tracking something that trades like a stock. So, like for example, these. Some of the ones that I have bookmarked. And I can't tell you how many there are, though. There are just so many of them. Most of the ones that I have bookmarked on here are actually ETFs. So like VXX, this is one that tracks the Volatility Index. So this one is an ETF. ETN, ETF, they're the same thing. But it trades like a stock. So if you want one that trades like a bond, if you want to be safe, you could find one that's a bond one that just has bonds in its account. So you could do it that way. You can also find something that's really, really specific, like the oil one, the UWTI. That's an exchange-traded note or an exchange-traded fund, same thing. There are tons of them out there. So you just got to find one that you're interested in. If you want a safe one, there's safe ones out there. Here's a bond ETF list that I found just by Googling it. Just put in list of bonds. This is etfdb.com. There are tons of websites that are just like this. And lo and behold, there's one right there. Short-term bond ETF. So instead of going in and buying bonds, just buy that. So you would just put this into Scottrade or E-Trade, and you would get BSV. It's $80.51. That's a pretty expensive stock for us, but you're investing in what you want. Or like this one, a total bond market ETF, all bonds. That's it. There's a US bond market one. Here's a high yield corporate bond one. You can see there are just tons of them out there. So you don't have to worry about choosing a bond or worrying about buying, how many of them? What was it, 35 or 75 of them? No, you don't have to worry. You can buy as much as you want in this. And then they buy the bonds, and then you get to just trade based on the price of the stock. That's it. So there are tons of these out there. And if you look at this list, it just goes on and on and on. And there are, I can't even tell you how many pages there are of this. And they're all the same thing. You could do the dollar versus the Mexican peso. Anybody know what the Mexican peso is at right now?
I think it's about 15 to 1, isn't it?
I think it was even higher the last time I looked. It was actually at like 17 a couple weeks ago, which is insane for the peso. If you're interested in trading currencies, you could do that too. If you're interested in trading India or China, this is how you find them. You could put in China, India, and search for ETFs that do that. And again, an ETF is just something that trades like a bond, or a stock, I should say, without having to go in and do a bond. So that's all in the PowerPoints here too. So, what else to find? You can also do it from this as well. So from your USAA account or E-Trade or Scottrade, you can also find them in here. And where you find them, exchange traded funds, right there, ETFs. And they'll tell you the best performing ones today. If you just want to do copper, here you go, commodities, we could do that. What else can we look for? Here's a list, featured 4 or 5 star rated ones, large cap ones, so these are big companies. Again, it's going to look different based on whatever platform you're using, but they all pretty much have the same things available to all of us. So, questions. We'll take the last couple minutes for anything you guys want.
I had a couple. Why was the price of the bond? I think it was the bond.
Yeah.
Yes. Why don't they list the actual price?
You know, I have no idea why they actually don't put the decimal in the right spot. But every bond starts out at $1,000, and then it either goes up or down based on its value or perceived value. So.
And then my other question, you were talking about not being afraid to take less, to sell.
Right.
So how do you discern when you should sell because my company is going down, or just riding the market out?
All in the research, and it's kind of gut instinct too. If you see like that thing going way down, it also depends on your time horizon too. Like Freeport, if you know that it's a good company and like when it goes down like that, there's still the potential that it's going to go back up because who knows, maybe somebody's going to buy them, like the Phelps Dodge thing. So you still might benefit it even if it goes down. So if you're doing a long time horizon, yeah, just ride it out. Don't panic. Just let it go. Will it go back up to the 30s? That I'm not so sure of. But buying it at 8, yeah, it's guaranteed you'll make money. I don't know where you sell though.
I don't know where I sell either. I'm just waiting to decide where to sell.
Opinions? What do you guys think? What do you do? I would wait to see what the dividend though is. That'll be fun to, when you get your first dividend thing, it's like, oh, free money. Yeah, it's pretty cool, even if it's a couple bucks. So, other questions?
I don't know enough to ask any questions.
You know, and that's a lot of it is you just educate yourself on whatever you're interested in. So there's so many different investment opportunities that you could do. You just got to find one or a couple of them that you're interested in. So if you're interested in healthcare industry, yeah, start becoming an expert on that. And then you start whittling it down to okay, I'm interested in companies that are working on cures for cancer or malaria or whatever it is. So you start getting more specific based on whatever you're interested in. There's not really a right or wrong, and everybody's different. So like why I've bookmarked some of mine, I actually forgot why I bookmarked some of them. So I couldn't tell you why I bookmarked VWO. Actually, no, now I can. It's an emerging market one. So I've been watching that because emerging markets have gone down a lot worse than any of the other places. So at some point, it's going to go back up. That other one is a Japan market. The TVIX thing, that one I was playing with my my investing students, and that one is one of the most volatile ones you could possibly own ever in the entire universe. So it is not for the faint of heart. I think one of my students lost about half their $1 million when in our stock market game. So it's no joke when you play that one. So anyway, you just got to bookmark whatever you find interesting, and then and just keep adding to it. So like this other one is that's a financial one, the XLF. A lot of these X's are the sector spiders. And that's actually a great one to start with. If you want a nice, easy one to find, just Google the spiders. They're basically all the different ETFs for each of the industries, and then they get more specific from there. Like this one is finance, and it's all the financial institutions. So if you don't want to invest in Bank of America, BAC at the top of my list, you would actually invest in the XLF. And then it's Wells Fargo, Bank of America, Chase, all of them, all rolled into one. So how are you guys going to make your money?
Dollar change, percent change in volume, what is
Yeah,
that?
so all of these things, yeah, that's a good point. I didn't talk about these. So this is how much it's up or down on a dollar basis for the day. Then this one is the percent change for the day. So it would be 0.86 over the 1918 or whatever it started with. And that's how much it's changed for the day. Green is good, red is bad. The volume, you'll notice that that's actually how I have mine set up. I base mine on the volume because the more volume there is, the more that thing is trading each day. So if you look at like my second page, look at that one. Look at GWAR. How many shares traded today so far? If you can't see that, 1,586. Is that a lot or a little? It's a really, really, really tiny amount. So that thing, it doesn't really go anywhere each day. It only goes up or down by a little bit on a daily basis. So the ones that I have bookmarked are mostly the ones that have a high volume. So the higher the volume, the more the price changes on a daily basis. And that's where I'm going to make or lose a lot of money. So the volume is incredibly important. So and then the last two columns are the bid and the ask. So if I were to buy the UWTI right now, I would pay $10.24 a share for each share I bought. If I sold it, it would be $10.23. So I'm going to lose a cent. But hopefully I'm going to make enough to cover that. And then like on Scottrade, it cost me $7 a share. So if I were to go in and buy that right now, and again, everybody's going to be different. Each trade platform is different, but I would hit trade. I'd say buy. Like I plan on buying 1,000 shares. Do it market, review the order. So it's going to cost me $10,267 to do it, but not really. It's actually going to be, actually, you know what? I think the $7 is in there. So it would be $10,260 for the stock, and then Scottrade charges $7 for the trade. So I would hit place order, and I'm done. And now I have 1,000 shares, and hopefully I make a ton of money today. So.
Are those your play ones for your class, or you have actually invested in them?
No, these are the ones that, this is my live account where, yes, I will be doing this at some point. So the just like I decided half my money I wanted to have safe, so I couldn't be stupid and invest in something that I would regret later. So that's why I did the VTTHX thing, because it's safe and I'd never really have to worry about it. So as soon as that thing goes down to like the last time I bought, it went down to the 16s, and so obviously I've already made a dollar on it. So it's relatively easy and low stress, so I don't have to worry about that one. And I know at some point it'll go up. So there you go. That's it.
It's like we're all stunned.
15 hours in 1 hour. I know, there's a lot, but that's just it. You guys just got to start and just investigate. You can't screw things up unless you hit that buy button. You can't screw it up. Just don't hit buy and you're safe. Like if I had hit buy there, oh yeah, then I'm going to be following that thing all day today. I'd be like, okay, when do I sell? Same thing, like Shalene, what? I don't know when to sell. That's something that you've got to decide.
But it went up, I mean, it was up a lot from when I bought it, like
But that-
500 bucks.
And that's another thing, is don't get too greedy. If you make a bunch of money on it, just get out. Get out, wait till it goes down again, buy it again, wait till it goes up again. You just got to investigate exactly what happens with each one of those. So there you go. I don't have all the answers. I'm still learning myself.